So we talked about insurance in terms of the castle walls of protecting the assets you've accumulated. Life insurance, we also fit into this insurance bucket because it's protecting the income that the business can generate. So not just the intrinsic value of the balance sheet and the assets, but now this is protecting the income. So I know you love life insurance agents. So maybe talk all of us through buying life insurance like a billionaire.
The first thing I would say is the number one decision about life insurance, and probably the most useful benefit to life insurance, is the death benefit. You got to get the death benefit right, because if the death benefit is needed to replace income or for other reasons for your family or for your business, the death benefit has to be done right. What I see sometimes is insurance agents will try to get as much in a permanent policy as possible because they make more money on a permanent policy. So they kind of find out what premium the entrepreneur can afford, and then they build that around mostly permanent insurance. I would say what you need to do is find out how much death benefit you need, because you want to make sure that you're not spending so much on insurance premiums that you're not actually funding all the areas of growth for your future. And one way you can do that is buying too much permanent life insurance. So I start with the death benefit number one, and then you can see, does permanent life insurance fit in, if at all? Because sometimes it doesn't fit in, into your game plan and what you're trying to achieve. So term insurance for the death benefit, and then you could have a portfolio of insurance if you need a permanent policy. And I know when we created the business together, we did a buy-sell. So that if I got hit by a truck, that there'd be a death benefit that get paid, so you could buy out Mimi, so you could continue to have the business, and vice versa. If something happened to you, I got to replace you. You're pretty smart, smarter than you are good looking, but important for the business. So I want to have a death benefit so that I can buy out Leanne and also have money to replace you. You don't have to replace me as much because I'm getting old. But those are really important pieces. And remember, we staggered it. So in so many years, we figured we would have enough assets within the business so that we could buy each other out. So we staggered it and layered that term insurance. So that's the most important thing. You want me to talk a little bit about permanent insurance?
I think this is an important topic to go into. And one thing that I'll add before you talk through buying life insurance like a billionaire is you talked about why would the insurance agent solve for how much in premiums you can pay as an entrepreneur. It's because that's the direct correlation that's going to drive their commission schedule. So the more in premiums you pay, the more money that life insurance makes. It's literally a sum zero game, because when it comes to permanent life insurance, generally, if they are not blending their commissions out of the policy, 100% or so of that entire first year premium ends up in the insurance agent's pocket. So he's incentivized, or she's incentivized, to figure out how much can you afford. That's how much I'm going to feed you, instead of what is the actual goal we're trying to achieve.
Yeah, it reminds me of the old story of the guy that goes to the car lot and he has only $3,000, and surprise, there's a car that costs exactly $3,000, the money that he has. Let's talk about buying life insurance as a billionaire. And everything that we teach entrepreneurs and everything we do in our fractional family office is tied to what billionaires do. So billionaires buy retail, traditional life insurance. They also buy PPLI that we can talk about another time, but they don't buy retail life insurance the way most entrepreneurs do. Because what most entrepreneurs do is they have an insurance agent they know and like, or someone refers them to an insurance agent, and that person comes and shows a proposal that is never true. By the way, in 30 years, I've never seen a life insurance proposal come true. They're always different, the way they actually play out. It looks great, and then they get their blood work, their EKG, whatever they need to do, send it up to the insurance company, get their rating, whatever that is, hopefully preferred or preferred plus, and then they put it into force, and then they have this permanent policy. That's not the way billionaires do it. What billionaires do is they always have someone who represents them, who knows the life insurance as well as the agent who's selling the life insurance, but doesn't benefit in any way whether the billionaire buys the policy or not. And that's a role that we serve for our clients, representing the entrepreneur when they're buying life insurance. Next thing is figuring out the proper type of insurance and how much we should be putting toward that. If you're building up accumulation value in a permanent policy, how much of their disposable investments should go towards something like that? And those are calculations about different tax brackets, situations, how they feel about things. There's a variety of things. There are other investments, where their money's going, what their age is. Once we've calculated all that, then the next thing is underwriting. And when it comes to underwriting, agents like to underwrite with one or two companies. First of all, they get trips and better compensation. Also, it's easier for them just to write through one company. But that's not what billionaires do. What billionaires do is they take a John Doe or a Jane Doe. They get all the medical information. They run the blood tests, the EKGs. They get all that information. They send it up with a Jane Doe or John Doe name on it, and they send it to, let's say, 10 or 15 of the top insurance companies. They let them underwrite it with the real numbers without the real person, and then they look at the offers. And then they go back and say, hey, Prudential, MetLife's got a better offer than you. Will you come up and meet the offer? So they get them negotiating against themselves, against each other. And that creates a better underwriting result. The underwriting result stays with the policy for life, forever. And just a couple of differences in an underwriting level can make hundreds of thousands of dollars of difference of cash value in the future, reduce costs and more cash value buildup. So that's the first thing. And they also require that all commissions are disclosed and negotiated. Many entrepreneurs don't know that you can actually negotiate down permanent life insurance commissions. And I've had agents tell me before, like, Jim, you can't do that. And I said, well, maybe you can't do that. But there are agents out there that can do that and will do that. And that's an expectation. So those are some of the things that you need to do if you want to buy life insurance like a billionaire.
Yeah, no, well said. This is, again, oversold solution to the entrepreneurs that we work with because they are high income, high cash flowing entrepreneurs. So they are the perfect whale for a life insurance agent to sell a overfunded life insurance policy to. So definitely very important. Let's wrap up with disability insurance. This, I would say, is one of the most overlooked insurances that far too many entrepreneurs do not have disability insurance. And if you are a sole provider and if your business cannot continue on, if you're disabled, it's actually worse than dying, because if you die, at least your death benefit gets paid out, your term insurance, whatever gets paid out to your surviving spouse and your family, they're taken care of. In a disability scenario, not only can your income potentially fall or completely disappear if the business cannot run on its own, so your family loses income, but also your expenses may go up because now you need to have all of the medical care. You may need to make sure that your house is accessible in other ways that it wasn't. So the disability scenario is actually quite scary, but very, very few entrepreneurs have any desire to get disability insurance.
And one thing, just to tie this back to the home and auto insurance, having underinsured and uninsured motorist coverage is critical, because if you do get hurt and you have a disability or you need a lot of rehab, a lot of those expenses can be covered if you have underinsured, uninsured. And there are a lot of people out there who don't have coverage and you wouldn't be protected.
Well, I think that depends on how did you become disabled? That's where it becomes very important. Because if I'm just skiing down the mountain and I hit a tree, that's on me. There's no uninsured and underinsured that's going to get me. But if I'm walking my dog at night and someone goes off the road and hits me and they only have $50,000 of insurance, that's where the underinsured, uninsured comes into play on my policy, because then now my insurance company will step in and pay me. So I totally agree that those underinsured and uninsured is kind of like a backdoor disability policy to an extent, but it all then comes to the definition and like what's the triggering event that got you disabled. If you're responsible for the reason why you're disabled, then you need the disability policy. Whereas if it's not necessarily your fault, you're a victim, that's oftentimes where that uninsured, underinsured comes into play.
Yeah, I agree 100%. And if it looked like I was saying don't get disability insurance because you have underinsured, uninsured, I was saying that incorrectly. Make sure you have underinsured, uninsured motorist coverage on your policies. But as Bryce said, make sure that you have disability insurance if you were to get disabled and couldn't work, if there's no way your business runs or you don't have enough assets or cash flow to handle it. And this is probably one of the insurance policies that especially nobody likes. I don't like disability insurance because you're thinking, I'm not going to get disabled. There's no way I'm going to get disabled. And that's a natural thing because we just don't think it's going to happen to us. But if it happens to you and you don't have this coverage, it can destroy your family in multiple ways, but mostly or most importantly, just financially. And then that will cause other problems. But these policies are generally expensive because if someone gets disabled at age 30, they pay out to age 65 sometimes. Sometimes you do a shorter pay policy. And just make sure you're realistic about what you need. You don't want to be overinsured, but usually business owners are underinsured when it comes to disability insurance. At least that's what I see.
Yeah, I mean, and the reason they're expensive, though, is because of the underwriting and based off of the payouts. And it's just a fact that the disability insurance pays out more than life insurance. That's because there's a much higher probability of you becoming disabled than dying very early and prematurely. Yeah. So insurance pricing is 100% based off of the payout ratios and the underwriting. So that's why it's more expensive, because the probability of it happening is way more, which could lead you to saying, well, that's probably why you do need the disability insurance.
Yeah, and there could be a piece of fraud in there because you can fake being disabled. It's hard to fake being dead.
That's true.
I've seen our dog try it, and it does not work. I figure it out.